Let's talk about that bit of a change. Again, very strong year 2018. Market volatility does tend to sort of affect confidence. What are you hearing in boardrooms right now in terms of the willingness to make the big decision when it comes to M&A?
Well, it's interesting. As you said, for all of 2018, we had the third best year on record, so $4 trillion of activity, and really hallmarked by large transactions. You had 45 deals over $10 billion, which was a meaningful increase from last year. And we started the year with big consolidating transactions and with tailwinds from tax reform and strong earnings growth and strong optimism and CEO confidence. And for the first 3 quarters of the year, we probably had a top decile environment for M&A, and we were on pace for a record. And then we hit the fourth quarter and things slowed down a little bit. And it's interesting, when I'm out talking to CEOs and to boards, they're still quite confident in their own business. They're confident in the tailwinds they've got and the earnings growth, and employment is still tight. But I think they're actually a little bit reactive to the markets and some of the political and geopolitical concerns out there. And there's just been a little bit more of a circumspect attitude towards M&A over the past month or two.
Is it more just from looking at the equity markets every day, or are they seeing things in their business, for example, wondering what the impact is going to be ultimately from the trade war with China or things like that are making them say, let's wait?
It's interesting. It feels like a bit of a combination, but more reactive to news events and potential news events than it really is to underlying performance in the business. So there's been anxiety about China-U.S. trade, there's anxiety about interest rates, and there's been lots of market volatility. I think that's caused people to just take a little bit of a step back, really over the last 4 to 6 weeks, and we've seen a little slowdown in activity, not fully pens down, but just backing away. And really looking to gear up as we head into 2019.
Right. So what you've been through, and I've been through many of these kinds of cycles where it changes a bit. What changes that? Is it simply that we get a quiescent equity market and suddenly everybody's okay?
Yeah, I think there's a possibility that a return a few more days like today in the equity market, or a few more hours like today in the equity market, could get confidence back. It also may just be people coming back from the break and looking into 2019 and figuring out what are the strategic things they want to try to achieve over the course of the year. Tax
reform will have been anniversaried. Does that play a role at all in the willingness to use capital?
It clearly was a tailwind that we saw this year for people, but I think it's continuing to drive growth in business, and I think that's part of what drove $4 trillion of activity this year. Now, it also drove $1 trillion of share buybacks, and so that capital will get put to work. It'll get put to work to growth if it's available, and if not, it's going to get put to work buying back stock, especially as the stock market dips down a bit.
The M&A market for the last few years has been dominated by strategics, but PE firms have poked up their head. I mean, there's a few things I've been tracking, whether it's Arconic or Nielsen, or there's a number of different large LBOs that have at least been discussed lately. Sure. Are the credit markets an issue there? Are the PE guys kind of acting late cycle here and going to really be as active as it seems?
Yeah, it's fascinating. I would say for all the headlines, which have been big transactions driving the market, the actual pickup in activity broadly underlying the strength of the M&A market has been private equity. You've probably had 30% of transactions have had private equity involvement in one way or another, and that's really without any major take-private transaction over the course of the year. You talked about a couple that might be rumored, but there's been no real big take-private deals over the course of the year, but activity is steady. You've got a handful of funds that are in the high teens in terms of billions of dollars, or north of $20 billion. I think there's $700 billion of dry powder in private equity, and so that will continue. What's been interesting this part of the cycle, as opposed to the past, is they've continued to invest through ups and downs in the cycle. I think private equity is putting capital to work. The returns to the cycle have shown that it makes sense to continue to put capital to work, and I think that will continue into 2019 and potentially even pick up if the market correction holds.